Hello, everybody. Kevin Broughton coming at you here with a dear friend of mine who we are very lucky to have on our podcast today. For those of you who have not tuned in, please tune in to our Success Unlimited arena. We have a plethora of great tools and tips and strategies to help loan officers, regardless of what company you work at, have a better life, a more freedom-filled life, less stress, and hopefully more closings. That's our mission here. And we try every day to bring valuable content so those can come true in loan originators' lives nationwide. And if you have tuned into our series, you'll know that this today is segment number 3 of our superhero series. And we have a true superhero with us today, hence my background and hence his shirt. But this guy has been working with me for just over 7 years now, which is hard to believe. And I learn every single time he speaks. And so you're in for a true treat today. And without any further ado, I'd like to welcome my friend Dale Vermillion to our podcast. Dale, how are you?
Kevin, I'm great. Thank you so much for having me. Love you, appreciate you. And I can't believe it's been 7 years. That shocks me, but I'm so happy it has been. You've really made my life great.
I know, isn't that crazy? Like, it kind of feels like it's yesterday when we met you, but I think it truly was 2014, wasn't it?
I think that's right. I think that's exactly right.
All right, so we're going to just jump into a few questions. You truly are a superhero. That's why I chose my background and asked you to wear your shirt. So, Dale, you know, you've had an unbelievable career in the mortgage industry spanning multiple decades, 3 at least, and you've seen it all. And you've worked with more people than I think anyone I've ever met, certainly. I know that you've been involved at the highest level of big banks and of independent mortgage banks and mortgage brokers and everything. And specifically, you've helped our organization grow in a myriad of ways. But what do you see as the landscape of the industry over the next 12 months? Do you see any trends or anything out there that we should be concerned about or focusing on?
Well, first and foremost, I think we all can agree that the trajectory of interest rates over the next 12 months is going to be upward, not downward. Everything would tell us that, from even simple things like the jobs report we heard today on through, you know, everything that we see with the bond market and just the economy in general. So I think number one, we've got to be prepared for a rising rate market. That has a lot of implications to it. That means that we've got to have an absolute A game. B games don't make it in rising rate markets, only A games. B games will work in a dropping rate market we just came out of, but we've got to prepare for that. I think that's number one. And I think number two, you know, you hear all the talk, Kevin, you hear it as much as I do about the fintech revolution and how everything's moving to technology. But, you know, I want to remind everybody listening to this that technology is absolutely fantastic. It's great. It's wonderful. And it's got to be part of our business. But if you lose touch with the relationships with your partners and with your customers, you're missing 50% of the equation of success, because the key today is being high tech and high touch, not just high tech. And that's one of the things I'm seeing, Kevin, is a lot of originators are moving that direction of we're becoming so technology minded, we're losing those relationships we've had for years that actually create our success. So those are two big things that I would say we're going to see. I also think we're going to see this inventory get a little bit better that we've seen in the purchase market. And we're going to see new construction come up sometime here in the near future. That's starting to stave off a little bit and start to plane out a little bit. So those things are going to continue to have a great purchase market in the next several years.
I agree. I agree with every word you said. I think we will be at some point soon seeing a rising rate environment. And like you said so adeptly, B games don't work in rising rate environments. And I think so many people, myself included, have had an unbelievable year in 2020, but we can't lose sight of the fact that when interest rates start with a 2 for the first time in the history of our country, you know, sometimes guys on a B game could do okay, you know? And so I appreciate those words. And of course, technology, you're right. So many companies, ourselves included, have invested millions of dollars in technology, and it's mandatory that we do so. But to think that that alone will supplant your need to carry on personal relationships with referral sources, borrowers, and the like is just fool's game. And I think that's a great point, that we can't rest on our laurels that a piece of technology is going to cement that person to be a lifelong client.
Yeah. It's interesting, Kevin, because that I do a lot of work with a lot of the high tech companies. I've got very good relationships. I just got through doing a series with ICE Mortgage Technology, and these guys got 1 million stats. When you sit down with all of these executives in these tech companies, and I know the highest executives in the biggest tech companies in the country today in the mortgage arena, they're all going to tell you the same thing from their stats. We still see that 70 to 80%, closer to the 80% of consumers, no matter how much technology they have, they still want to talk to a human being. They still want to have that advice, that if nothing else, just that affirmation that you're making the right decision, and somebody just to make them, kind of handhold them through the process to answer their questions, because it's still a complex business, no matter how you look at it, even with technologies to a consumer. So it's really important we remember that.
It's also important that we remember that for most people, this is likely their largest financial investment of their life.
Right.
And I don't know about you, but I'm old school, I guess, but I still want to talk to someone if I'm making a pretty large financial investment,
That's right.
So I think those words are extremely important. If we switch to sales just for a minute, because the vast majority of people that tune into our program are salespeople. Do you see things that worry you, or things that are concrete, absolute musts that salespeople who are belly-to-belly salespeople who are, not lead-based but self-generated lead-based salespeople are doing well now, or need to continue to do well, or need to start doing well as we move into a slightly different market?
How long you got? Let me give you some of the big ones. All right. Number one, if you're not already proficient and very good at social media, you better get there quick, because that is the future, whether we like it or not. You have got to have a strong presence on social media. You have to have a powerful presence on social media. You have to be a thought leader on social media. And here's the most important thing, Kevin. You got to do everything with the highest level of professionalism. I see too many originators who, what they'll do on their social media is they don't think about their posts. They don't think about the things they're putting up. Your prospective partners that you're going to be calling on to originate with and get referrals from are going to go right to your social media the minute they hear from you. They're going to check out your personal Facebook, your Twitter feeds, your YouTube channels, your LinkedIn page. They're going to do all that. And if they see something that looks less than professional, you're in trouble already. You're never going to get an opportunity or an entree. So that's, I think, rule number one is that. Rule number two, remember that the world is your customer. It's always amazing to me how many originators that I meet in the retail world that say, well, where should I go get referrals from? I'm like, are you kidding? Open your eyes and look around. Everywhere you go, there's always one of two things that you can do. Either turn people into customers, or you can turn those people into referral partners, one of the two. And you got to remember that. I mean, my entire career when I started back in 1983 and then trained loan officers, managed loan officers, up to a team of 900 loan officers at one time that I was in charge of. I would tell them, everywhere you go, your eyes are open to look for customers, to look for referral partners, to let people know what you do, make it known. And one of the things beautiful about today, 2021, and where we're at, is that 2020 and early 2021 for many realtors was really not a good year with their experience with lenders. That's great news for us. That's the open door opportunity that we have to have. The key there is do your research on your realtors before you contact them, because that's the key, is knowing things about them in that first call that they wouldn't expect you to know. That's where you win over the relationship, because you did your homework. And the third thing I would say, the last thing is, do not be what I call a link seller. This is a very big problem. What's a link seller? I've got an online application, okay? I get a customer who's a referral from my realtor. What do? I call them up and say, hey, let me just send you a link. Go ahead and do all the work on your own. And when I get it, I'll call you with an offer. Okay, wait a minute. Where's the relationship in there? The problem is you're jumping in. I'm fine sending them a link, but I'd rather you do it while you're on the phone with them, walk them through it, build that relationship with them, because if the first contact you have is at point of sales presentation, the problem is you don't understand their needs, you don't understand their personality, you don't understand their goals, you don't know how they communicate. It's your first time with them. you can really get in trouble in that. And sometimes we assume too much with the referrals that just because I got a referral, I'm going to get the deal. Not necessarily in today's market, you're not. Those are three big ones.
Those are three great ones, and I think that everyone should listen to that and really think about that in their business. And you reminded me of something that I learned, a valuable lesson this morning. It's ironic that we're talking today on that topic. I was on the phone with a dear friend of mine who's here in this business with me, and they hired a young man into their business, a 23-year-old. And the kid came back to work yesterday and said to my friend, I really like this business. And he said, yeah, I can tell you're crushing it. And he says, yeah, I had to go to the grocery store today. I talked to 3 people in line, and one of them asked me what interest rates are because I told him what I do for a living. I had to go into a bank, and I walked out of there with a referral of a guy that was in there about a mortgage, and we're in the bank that he banks at. I walked out with a referral, and on the way home, I had to walk through the park, and there were 8 guys playing chess, way older than me, and I stopped and talked to them, and 2 of them asked for my card. So
I love it.
A 23-year-old kid that in less than an hour hit on, in essence, 3 different people at 3 different social arenas, and he doesn't know any better. And my friend said the kid does this all the time, and he closed over $2 million last month. He's been in the business 4 months, and he just tells people what he does for a living and is nice. And so it hit home today where some of the things you just shared and what we got to be doing, building relationships. And here's a young guy that really probably doesn't know much about what he's doing, but he's not afraid to tell people, and the whole world is his potential client, you know?
That's exactly right.
That's great. That's great stuff. So let's move into something that I hear about and deal with on a daily basis that I know you're very proficient in. Of course, you know, many realtors or many loan originators have had some pretty good success in the last 18 months. And unfortunately, it was spurned by this pandemic, but it pushed the interest rates down in the floor, and all of a sudden the economy has some life to it and what have you. Things are going fairly well for a lot of loan originators. And almost every one of them that I know is building teams. And a lot of them are struggling with building teams. And I know you've helped a ton of people, many at our company and many at other companies, build teams. Can you speak just for a few minutes on what to make sure you're honing in on as you build a team? Because it's obviously a lot harder than it sounds.
Yeah. Well, the very first thing that you have to do, Kevin, when you're building a team is make sure you have clearly defined the role and responsibility of the position that you're looking to fill. I can't tell you how many times I've worked with, branches or worked with teams, and, they've got LOAs, they've got processors. And when I sit down and say, so give me the job description, show me the roles and responsibilities, tell me exactly what they're supposed to do. And you know what? They're like the jack of all trades, master of none. They got them doing all these things, and they can't find a place for them. And they're like, well, they're not doing a good job. Well, it's because you haven't given them a clear direction. You haven't given them a path to run on. So before you even start doing any recruiting, sit down and ask yourself the question, okay, if I'm thinking about an employee, what is the role I'm looking for? Why do I need that role? What should that role be doing? And then come up with firm metrics on the expectation of what you expect from that person. That's number one. Number two, make a decision on whether you want to hire experience or inexperience. Now, Kevin, you know me well. You know what I prefer. I prefer inexperience. I always love to hire people off the street, just like that 23-year-old kid, because they got no bad habits. The only habits they're going to have is what I create in them. So I always like to bring in people that are new that I can train them into, because look, here's the fact of the matter. If you're an originating loan officer today and you're successful, what is the key to your success? It's replicating yourself. That's all it is. It's bringing people in that you can train them and teach them what you do day in and day out, so they start to do it just like you did it. And you'll get a bunch of mini yous. You got a whole bunch of business going. The key to that is hire personalities, don't hire resumes. That's the number one rule, is if you sit down in an interview and you don't have a good feel, there's a reason for that. Listen to your gut. Look for people who are, yes, they're intelligent. They don't need to be rocket scientists, but they're articulate, they're driven, they're hungry, and they really just have really ethical, relational mindsets. Those are always your best employees. And the last, and this is the golden rule of thumb, don't hire people when your back's against the wall, because that's where you get in trouble, is we make hiring decisions in a flash because we're short on people. Build a bench. Always have a bench of people for positions that you want in advance of that position opening up, so that you can really take your time and really mull through the candidates and pick the very best one.
I couldn't agree more with every word you said about hiring, and it's a difficult thing for a lot of people. You know, it's not as easy as it sounds, and some folks have gotten great at it and others have not been able to. But if anyone ever wants to give me a call who's tuned in today, I've had ups and downs with that, and luckily I've learned from some great people like Dale and gotten way better at each of the tidbits he just gave out there. And if ever anyone needs any assistance in that, I could absolutely try to help. So Dale, if you think about, you look out at this landscape, and I'm excited as heck. I'm excited as heck for the future. I approach everything cautiously optimistic, but I see a lot of great opportunities for people. And I think that business for those who are willing to work and those who are willing to dedicate 100% every day and fire on all 8 cylinders with a mission and with a path, the future is extremely bright. But I have a question for you that I'm not sure what your answer is going to be. I've talked to tons of loan originators, some doing, big volume, 40, 50, 60, 80 units a month and beyond. How important is it, do you think, as you're growing a business, and I mean a real or loan origination business, to know your numbers? Is that imperative, or can they take care of themselves?
No, it's absolutely imperative. Look, I have taught a very simple formula for decades for loan originators, and it's this. The number one mistake that I see, Kevin, that loan originators make is they focus on their month-end numbers. It's all about how many loans am I going to close this month, and that's exactly the wrong metrics. Because you don't control fundings as a loan officer. You don't control when things go bad on the back end. You don't control when the appraisal falls out, or you have a problem on the title you could never have anticipated, or the realtors have a fight and the deal falls apart, or the seller backs out. You can't control that. What you control is sales. That's what you control. So the first thing you need to understand is, when you start looking at metrics, look at what you control, which is from the initiation of that lead or that referral through the commitment of that borrower to give you documentation, sign all their documentation, and get into process. And then let process do their job. And here's what I know. The traditional conversion rate in the mortgage business has always been around 75 to 80%. That's pretty standard for about everybody that I've worked with over the years. Some companies are higher at 90, some are lower at 60, but it's usually 75 to 80%. Well, here's what that means. If I get one committed sale a day as a loan officer, I'm putting 21 deals a month in my pipeline at a 75% conversion rate. Simple. I'm going to close 15 loans a month, guaranteed every month, no questions asked. So I need to know my metrics. And then what I want to do is, once I start building my business, start looking at things like your conversion rates and start to track them. So if they're starting to go down, you have to ramp up your number of leads or referrals in order to offset for a drop in the marketplace. Because sometimes the market will work against you and your conversions will drop a little bit. And then, like last year, the market works totally for you because rates are in the 2s, and all of a sudden you're converting 90%. And now you can either throttle back a little bit and balance life a little bit more, or just make that extra money and really crush it. But you have to know your numbers. There's absolutely no question about that, because if you don't, you're just shooting in the dark.
I agree with you wholeheartedly, and I appreciate that insight. I think it's fantastic. And that they got me on a tight time frame, Dale. They tell me how long I can go, how long I can nearing the end. So I just wanted to thank you. If you don't know Dale, he's a wonderful guy to get to know. He's been exceptionally successful and helpful to so many nationwide. He's been keynote speaker at National Mortgage Bankers Association. He's a guy that's literally helped. I know this sounds crazy, but there's been 1 million plus loan officers that have worked at different organizations that he has trained in. And he's just been a wealth of knowledge and support for our organization over the years, and will continue to be so into the future. And we are a better organization today because of your tutelage and your commitment and your passion for growth and for profitable and sustainable growth. And it's just been a pleasure. So I thank you for your time today. I wish you obviously all the best in everything you've got going on. I know you got a big thing coming up soon, which I hope is really great for you. And just thanks for everything you do. Thanks for being on our show today. And for all loan officers nationwide, tune in to Success Unlimited. Our platform reaches across many social media aspects. And all we try to do every day is bring content that'll help you have a better life, a more freedom-filled life, close more loans, and have less stress in your business. So, Dale, thank you. And any parting words?
Well, look, Kevin, I want to thank you because Success Mortgage Partners is an incredible company, and I am a better human being for knowing you and Owen and Vince and Allison. There's no question about it. I am so grateful, and I'm so thankful for the friendship, forgetting even the partnership, just the friendship. It's been a great 7 years, and love you, appreciate you greatly, and keep up the great work. This is an awesome forum that you have and format for people. Great way to help originators. So keep it up. Great work.
All right, my friend. Thank you so much. Everyone take care and be safe out there. We'll see you on the web soon.